All right, so this will be a trade recap for the 8th of January 2026. Let's get into this. Share my screen. I have to disappear for a second just so you guys can see everything, but yeah, let's take a look at this. All right, get zoomed in. Here we go. All right, good enough. All right, so this is kind of my setup for how I day trade. And the method that I day trade is basically as if you were day trading equity, so stock. Only exception is that I execute my trades via 0DTE options versus the actual stock itself. And the main reason that is because you don't need a massive amount of capital to play higher priced, more liquid stocks, or using margin and a dangerous level of margin at that. So just quickly kind of walk you through the process. And I guess that'll be the main lesson for, I would say, this and anyone that's kind of new to this. Preparation is the starting point. You really need to do your preparation on things. Otherwise, it's not really going to work out. You can't do this on the fly in the moment. That's probably one of the reasons why like news and scanners doesn't really work. You're constantly bouncing around, looking at different, stocks and things like that, different charts, trying to figure out stuff. Like, no, you need to really narrow your focus down. So you couple that with the fact you don't need a huge amount of money or capital to do this kind of strategy, lets you, again, focus. So for me, I trade SPY and Qs, and that's it. I don't change that. It's the only two that I look at. They're ETFs, incredibly liquid. So it's one thing you don't have to worry about any of that stuff. You're good to go, or any you can still worry about shenanigans, but for the most part, they play by the rules, as one might say, in terms of technical analysis, support, resistance, trend lines, things like that, moving averages. And you'll see that I don't have, other than moving averages, much on my charts. There's no like RSI, MACD. You don't need any of that. All you need is support, resistance, some moving averages, and that's really it, and a good understanding of technical analysis. So the small charts on the left there is the daily chart. So those are your daily candles, and then there in the middle you have your 1 minute candles for the, again, watching things play out. And then all the way on the right, you have my actual, again, broker, order management, things like that, options chain. So getting into this, let's see here. I'm going to actually take myself away so you guys can see everything unobstructed. All right. So getting into this, the night before is when I start looking for, the levels that are of interest for trading. Again, support, resistance, basic technical analysis. So typically, like, one of the main levels I will look for is the prior day's close. And then, again, depending on exactly what we do post-market, more in the evening, again, we'll see if I can find anything above or below. So again, for today, the levels that were selected, again, you have this one kind of gap fill down here on SPY. Again, looking at it again this morning when things were opening up and kind of seeing that we did kind of pop up a little bit. That was, again, an obvious one. And it was also backed by moving average support. So it was one of those things where there was, again, a good amount of support there. So that was of interest. And then coming up top here, trying to find something. It was like there wasn't really much above, and you're kind of challenging all-time highs. So again, in this style or stage of a chart, it's like I'm kind of looking more for the short than I am necessarily the long. So again, there was this trend here that goes back a bit. And as you can see, if you plot that out and kind of figuring out where that going to potentially intersect on today, you can see that, and again, that gives you some idea of where it might come into, and then you'd risk off all-time highs essentially. But yeah, I mean, coming into this one, this wasn't, again, the primary. I was watching Qs a lot closer than SPY, but SPY did come down into, again, that level, bounced off of it. So didn't catch this short up here, which was kind of the first one to trigger, because you don't wait for the levels. You want to start in before the level, add at the level, and then typically if you break above the level, you want to potentially, again, depending on how it does it, add into it, and then on that retracement back down, like if it's going to back test a level, is kind of when you want to get out, because if it holds that and pushes higher, then you might, again, find yourself in a situation where it moves up so quickly that, again, you're probably going to get stopped out. So that's something you need to do, kind of watch out for. But again, this is reading the price action and things like that. And then since I missed that one, it was kind of, okay, that's okay. It happens. Because again, like I said, I was watching Qs. So let's see if I can pull up an entry chart for you on that one. Let's see here. So here's my entries again. And this was actually the long coming into this level. Came down, hit, broke through, but didn't confirm lower, bounced back up into the level, came back down, looked like it was going to fail, but got sucked back up. So again, that's when the suck up happened. That's when it's like, okay, interested. Because the one thing, if I move this out of the way, when it was doing that and it came down again, yeah, see, like this level, and again, it was backed by the 9 EMA, which gave you that support, which is, again, something, again, to risk off of. So kept it small, again, because there was a chance, again, Qs that was looking a little bit weaker. So again, you got to remember that the companies listed in both Qs and SPY, those ETFs, overlap a bit, especially your Mag 7. So if tech is selling off a bit more, it can, again, influence things. So with SPY or Qs looking a little bit weaker, I was a little leery to, again, go long on SPY. But again, you follow the rules, your trade plan, and the strategy. Because just because I feel like it, or I'm concerned, or again have that emotion that says that you might not want to take it, and the rules are the rules. And if you take it, again, you're going to take it. Follow your rules. If it works, you pay yourself. If it doesn't, you stop out and rinse and repeat. You don't keep injecting emotion into this, because that'll just get you into trouble. So it was a single contract trade, in, out. And again, when it popped up on that first one, again, it came into this area right here. And that's where I paid myself, because that's the first place it's potentially going to reject. So again, may not seem like, again, a lot of range, but again, 50 cents-ish is actually not bad, especially in options, because you got to think like from a per contract basis. I mean, you're grabbing roughly $20+ per contract. So again, depending on the size of the account and the size you're working with, again, that's not horrible at all, especially again, if you're still learning this, you're using smaller order size, with a smaller account. It's like, yeah, there's nothing wrong with that. So it's actually fairly good with that one. But before the SPY trade, was working Qs. So for Qs, actually pull this right back up. That one was a little volatile in the beginning when we first opened up, and that's kind of what you see here on the order entry. Was when we opened up, dipped down, and again, we popped first and then dipped down The funny thing is like missed the short here because that happened real quick, but did grab the long down here, and it was just like, okay, and it was a very quick looking for that first reaction and got it, but because of volatility, again, kind of not the best fill. But again, that's when it's volatile like this, like that happens. It's like you just kind of accept that, and it is what it is. So after that, again, then it started breaking down. That was again good to be kind of out of it, because one of those things where it's like, okay, this is looking a little bit weaker than expected, so you have to kind of take that into account. Now, granted, there's a bunch of moving averages and kind of closes, open lows. Again, there's some volume zones in here, so it was one of those things where I was surprised it actually ripped down the way it kind of did and didn't really catch support. Meanwhile, SPY is kind of just waiting on cues to see what it's going to do. So again, you just kind of let it play out. And at that point in time, it's like one of my cardinal sins that I commit, or at least have committed in the past. It's a lot of overtrading. And to me, that's, again, you generally, like I would say in my mind, don't want to take more than 3 trades in a day. Like 3 is like a hard stop. And ideally only 1 or 2, because every time you're in the market, that's risk exposure. Like you may have a perfect trade plan, everything may work, and it just, or not work, but everything may be laid out perfectly. And then, majority of the time it works out. And then all of a sudden you get this one time where it doesn't. And it happens to be, again, your 4th, 5th, 6th trade. And all of a sudden it just does something unexpected. And you get caught in either a squeeze or a washout or something like that. And then the damage is kind of done. So it's one of those things where you can limit that risk exposure by simply limiting the number of trades to something that's reasonable. Again, because if you map out your levels and they're valid levels, they may work every single time. You might, again, trade a range where, again, it's just bouncing in between those ranges, and you're like, hey, every single time it bounces between these ranges, that's opportunities to go long and go short when it hits those levels. And it's like, yeah, right up until it doesn't. So again, you have to remember that it's like, is the juice worth the squeeze as the market session progresses? Because another aspect of that is the longer the session goes on, typically, the more people are getting involved, especially retail. And retail doesn't have the most emotional control, so they're very easy to, again, for the institutions to kind of dump on or manipulate in terms of, again, causing short squeezes or sell-offs. Because again, especially if they're seeking liquidity of some kind, and any of the names or in these ETFs, like they have a way of getting it. And this, yeah, you guys have your stops set and things like that, and they'll see that in level 2, and they'll, again, stop all those people out or squeeze people out and scoop up that liquidity just to grab it to fill, again, their order sheet. So you got to watch out for that. But again, kind of circling back to the beginning of this, probably the biggest and most important thing is going to be preparation. Don't try to do this, off the cuff. Again, don't just plot nothing and then hope for the best when it comes to selecting these levels, because it's one of those things where if you do that, it's not going to go well for you. I mean, it may work here and there. You might get the occasional one, but it's like, nah, like you will, in the end, get your teeth kicked in. And again, I know I did when I tried to do that, because I used to, again, do the whole scanners, catalyst, news bullshit. And it's just like, nah, don't do that. Pick a couple very, again, liquid stocks. Like personally, I would recommend, I guess I can't recommend iPlay, SPY, and Qs, like I said. Some of the most liquid tickers out there. And if you want with like other ones that are really up there, like in the Mag 7, yeah, you probably get away with that. But honestly, it's like stick with them. Learn them, like learn their behaviors, what they like to do, because they have very specific, like, again, characteristics unique to each of their names. So if you kind of pick up on that, that's another thing that you can, again, add to your toolbox, and it really does help. So, yeah, I mean, not the best in terms of like day, but again, it was profitable. So it's one of those things where that's really all you need, especially when you're growing a small account, learning this entire process. And kind of just getting your shit together. It's not about these home run wins. It really isn't. It's about, again, developing and holding to, again, the rules, the process, the strategy, and doing so day in, day out, so you don't have to, again, worry about, again, all the randomness, the chaos that, again, a lot of retail traders expose themselves to, and they do so for no real reason, because honestly, you don't need to. I mean, this is already hard enough as it is. You don't need to make it any harder. So, again, I guess to summarize everything, do your preparation before you trade. So build a trade plan. Start the night before, clean it up pre-market, and then hold to your trade plan. Find your support, find your resistance, find, again, what you're going to be potentially risking off of and those kind of things, because that is important. Like, if you do not do that, again, the only thing you can control in the market is your risk, or in the trade is your risk. So put all those factors, again, together before you go pulling the trigger on a trade, hoping it's going to do A, B, C, or X, Y, Z. Because, again, you'd be surprised at how often it's like market has totally different plans for what you're thinking it's going to do. So with that being said, yeah, catch you guys on the next one, and that should be tomorrow. Have a good one.